Our chief Washington correspondent Peter Cook has more on the pressure coming from Christine Lagarde, the managing director, to delay liftoff. Peter, is this considered a surprise?
How surprising is it? Probably a better question, right?
Not a huge surprise, I guess. But the fact that this recommendation was so explicit from the IMF, was voiced directly by Janet Yellen's close friend, Christine Lagarde, that may be the biggest surprise here. But the IMF has been urging the Fed to be cautious for some time, in part because of financial stability concerns. The plea to delay liftoff here comes as the IMF's annual assessment of the U.S. economy was released today. In that report, the fund cutting its U.S. growth forecast for the second time this year to 2.5% from 3.1%, even with some signs of rising inflation. Lagarde says the Fed has reason to hold its fire.
We believe that the trade-off between starting too early and risking disinflation and having to return to lower rate is higher than the risk of slightly above 2% inflation going forward.
Just last month, Janet Yellen herself said she still expects to raise rates this year if her economic forecasts hold up. Other FOMC members have opened the door in recent days to a rate hike, perhaps being delayed until 2016. Pam, Matt, it's going to be really interesting to see how the IMF's advice plays at the Fed. The central bank doesn't take too kindly, usually, to outside pressure. We'll see if this has any difference.